Happy Tuesday and welcome to the Business Show, your go-to source for money and finance news in 10 minutes or less every day. I'm Andrew Gincola, and here is what we're covering today. Markets rebound and stocks are bouncing back after 4 straight weeks of losses. Is this the start of a turnaround or just a short-lived rally? And Forever 21 is going bankrupt again? The fast fashion giant is shutting down all stores, blaming Shein and Temu for its downfall. Can it survive? We'll talk through that. Retail sales miss expectations, so consumer spending is still growing, but at a slower pace. What does this mean for the economy? PepsiCo bets big on prebiotic sodas. So with soda sales declining, Pepsi is acquiring Poppi for $1.95 billion. Is this the future of soft drinks? And consumer debt hits $5 trillion. And credit card balances are surging. Analysts warn that financial stress is building. How much trouble are consumers in? All that and more. Let's get down to business. All right, so the stock market has started to rebound and our stocks back on track. The S&P 500 rose 0.64%, bouncing back from recent declines, and the Nasdaq gained 0.31%, though it remains in correction territory. And the Dow Jones led the charge, jumping 353 points, fueled by gains of Walmart and IBM. Now, all 3 major indexes posted back-to-back gains, signaling renewed investor confidence. Now, this is the thing about stock market news. You're going to see the market go up day to day, and you're going to see the market go down day to day, week to week, month to month. It is very turbulent in the short term if you are looking at some of these stock market changes. But over the course of the long run, the investor who is a long-term investor doesn't have to worry about a lot of these short-term changes. So after weeks of market turbulence, investors are eyeing a potential shift in momentum, and strong earnings from the big corporate giants like Walmart are helping drive some of that optimism. Now, this rebound comes ahead of the Federal Reserve's rate decision, which could dictate the market's next move. So what's next is we're going to be looking, will this rally hold, or is this just a temporary bounce? And can the Nasdaq break out of a correction territory? Stay tuned as we track the next market move. Forever 21 is shutting down, and can it be saved? So Forever 21 is officially out of style again. It's not so forever anymore, and the fast fashion giant has filed for bankruptcy for the second time in 6 years and is preparing to shut down all of its stores. Now, Forever 21 has started liquidation sales at more than 350 locations. So if you're looking for a deal on clothing, that might be the place to go. The company blames its downfall to competition from Shein and Temu, which are 2 dominant Chinese e-commerce platforms. And despite closing its stores, court filings show that Forever 21 is still accepting bids from potential buyers looking to keep that brand alive. Now, why does this matter? Because the collapse of Forever 21 marks another blow to the traditional retail stores as online giants continue to dominate. And the rise in ultra-cheap, trend-driven e-tailers like Shein and Temu have reshaped how young shoppers spend. And brick and mortar retail is struggling to compete with fast fashion turnaround and algorithm fashion trends. And to be honest, Temu and Shein are also much cheaper than Forever 21 is. Forever 21 has to pay overhead for a store. They have to pay all these different employees who are in the store, and so they have to charge more for their clothing items. Even though these are cheap clothing items that last, a couple of wears, they still have to charge a little more than Temu and Shein do. And so that's probably one of the bigger factors that come into play for most consumers. Consumers are looking for a deal right now, and because Forever 21 is getting closer to the prices of just a regular department store, that is part of the reason why Temu and Shein are dominating them. So will somebody buy out Forever 21? That looks like the only other option to save the brand. It's not so forever anymore. Now, retail sales rise but miss expectation, and what this means for the economy. So retail sales are a lagging indicator of the economy, meaning that these are things that economists look at to see how healthy the economy is. And so retail sales edged up 0.2% last month, falling short of the 0.6% increase economists expected. However, after a sharp 1.2% decline from the previous month, even this modest gain signals resilience in consumer spending. So because retail sales rose just 0.2%, they missed forecasts, but avoid another drop. Excluding autos, sales met expectations with a 0.3% increase. Despite inflation and economic concerns, consumer spending remains in positive territory. So retail is holding steady for now, but with uncertainty ahead, all eyes are on the next move from consumers and obviously the Fed. PepsiCo buys Poppi for $1.95 billion, betting big on prebiotic sodas. So PepsiCo is diving deeper into functional beverage market with its $1.95 billion acquisition of Poppi, a fast-growing prebiotic soda brand. Now, for a lot of people, if you know what Poppi is, I think Poppi really originated as the social media soda brand on TikTok and Instagram. The deal, which includes $300 million in tax benefits, underscores the shift in consumer preferences as traditional soda sales decline. Now, PepsiCo acquires them for $1.9 billion, netting out to $1.65 billion after tax benefits. And soda consumption has dropped over the past 2 decades, but demand for prebiotic sodas is surging. And now Coca-Cola launches its own prebiotic brand, Simply Pop, which is going to be an interesting rival that is beginning to heat up. Now, Pepsi is doubling down on this growing trend of functional beverages. And Poppi and Olipop, which are the 2 biggest competitors out there, have disrupted the market, proving that the gut-friendly sodas have mainstream appeal. And with Coca-Cola jumping into the space, competition is set to intensify in the prebiotic soda wars. Now, if you're asking me, these prebiotic sodas are pretty pricey, so profitability is probably much higher on these sodas as well. Now, one thing is clear. Functional beverages are no longer just a fad, and Pepsi is making a huge $1.95 billion bet that these prebiotic sodas are here to stay. Consumer credit hits $5 trillion, and are Americans feeling the strain? So consumer debt in the U.S. has now topped $5 trillion, according to the latest Federal Reserve Consumer Credit Report. While spending remains strong, financial analysts warn that signs of stress are beginning to appear, especially as credit card balances surge and tariffs threaten household budgets. So the consumer debt continues to rise because total outstanding consumer debt saw a slight increase from the previous month, but declined 0.6% year over year. However, a deeper dive into the numbers reveals a troubling trend. Revolving debt, which includes credit card balances, jumped 8.2% in January compared to a year ago. That is not good. And non-revolving debt, such as auto loans and student loans, grew 3% over that same period. So what's next for this? As inflation and tariffs and interest rates continue to shape the economic landscape, household debt will be a key area to watch. Will consumers pull back on spending, or will debt levels continue to rise? With financial uncertainty ahead, experts say the time to get a handle on debt is now, before the conditions become even tougher. So if you are in credit card debt, that is always a pants-on-fire emergency. It is definitely something you need to look into further. And if you're looking to get out of debt, if you go to mastermoney.co/courses, we have a free debt course that teaches you exactly how to get out of debt. Listen, thanks for tuning into The Business Show. If you know someone who would find value in this episode, share it with a family member or friend. And if you enjoyed the show, please take a moment to leave a 5-star rating and review. It truly does help out the show, and cannot thank you guys enough for leaving those 5-star ratings and reviews. And don't forget to follow the show on Apple Podcasts, Spotify, or your favorite podcast player. Thanks again for listening, and we will see you on the next episode.